Welcome to PropPro 247, a smart suite of real estate calculators, valuation systems, tools. We pride ourselves in generating suites of calculators that make a real difference in the industry. They assist you with accuracy and speed and operational efficiency. Let me take you straight to the suite. Note in the suite we have a commercial property valuation calculator, development property valuation, business valuation calculator, capital gains tax, RSA done properly, transfer and bond cost calculator, loan amortization schedule, budget and planning for estate agents, mandate management for estate agents, rental yield calculator, and an personal income tax calculator for estate agents. Let me take you through them one by one, and I will move as quickly as possible. We go to the commercial property valuation calculator. Now there are only 9 input fields required, and no knowledge of formula is necessary. We calculate all the technically correct formula for you, which is net present value of future cash flows, internal rate of return, and modified internal rate of return. We'll show you that in 40 seconds, less than 40 seconds, we can do a detailed and comprehensive commercial property valuation. Let's start off with a property that generates 200,000 monthly income. It has fixed monthly costs at 20,000. Monthly maintenance provision, 3,000. Excuse the typo. Vacancy percentage, let's put in 5%. Your envisaged cap rate, we can put in 11%. Annual rental increment, let's leave at 6%. Current funders rate, 9%. Deposit that a prospective buyer would put in, 40%. Annual expected growth at 4%. At this point in time, you have performed a complete valuation process. And let's take you to, we perform 5 to 20 years reports. Let's take you to the 10-year report. It's the most commonly used. You'll notice your inputs carried across from your input fields. Below that, the value of your property has been calculated based on your cap rate, your net monthly incomes after your vacancy percentages, your net annual income, and your mortgage calculator has been automated for you based on the deposit. You chose, a prospective buyer chose a 40% deposit, so the balance, the principal, would be the amount that he would fund against this at the current funders rate at 9%. So this is automated for you. Below that, again, we have automated the entire cash flow for this period of a 10-year project that we're looking at, 10-year commercial property. But more importantly, we've automatically calculated NPV, IRR, and MIRR. MIRR is your modified internal rate of return. It's the most important formula for measuring projects. The reason why this is preferred to internal rate of return by modern funders and investment analysts, etc., is that we are able to modify the internal rate of return and cap the surplus cash flows to equal that of the funder's interest rate. Reason being is that the minute your commercial property becomes cash flow positive, it is conceivably possible that you can invest that into your own debt and achieve a 9% return. The internal rate of return, however, has a flaw in the formula in that it will keep calculating at its own internal rate, and it is not necessary, practical, or achievable to perform at that particular rate on positive cash flow. So modern investment theory focus on modified internal rates of return. Now, everything is computed for you from those input fields. You print to PDF and you send off to potential clientele. Any data is easily changed, and you will see that all the returns, cash flows are immediately changed. Let's, for example, have a look at our annual rental increment and state that that is 8%. And we immediately go to our 10-year report again, and we will see that all our formula has been changed, our cash flows, our loan amounts, because it has changed the various funding throughout the period. So that is the commercial valuation calculator. Let me swiftly move to the development property valuation calculator. Your basic input is your activity code. You'll choose what type of activity you're expending on or receiving cash, the amount of cash, and critical to the development property valuation is the date at which cash flows are expended. Now, this has been a short example because there are perhaps 100 input fields that you would put through the process of a development evaluating a development property. But in short, it will calculate, it will show you where your cash has been absorbed. More importantly, we make use of XNPV and XIRR. Now, in our previous slide with commercial property, as well as with business valuations, we make use of NPV, IRR, MIRR, but they will not work on development property valuations because they contain irregular cash flows. They are date sensitive internal rates of returns and net present value. So these are the only formula that will accurately measure your development project. Also within the project, you will see this is a section for purely for sales when you're selling your project from, shall I say, independent apartments or houses or whatever, and your whole development is focused on sales. And this is when you focus on retaining stock. When you retain stock, we do the commercial property valuation and we bring all the results into your formula to provide you with an accurate percentage return and net present value. We have a look at the business valuation calculator. Now, all this is on your home page. You can go to any of the calculators and make use of it. Again, if I run through here very quickly, there's basic input fields which you will put the latest balance sheets, the net profits after tax, etc., and very limited input fields, and we will automatically calculate the value based on your price earnings ratios, provide you with cash flow reports, and more importantly, we will provide you with a formula that is utilized by all bankers, funders, investment analysts, etc., to correctly analyze the viability of the business versus the risk. Go back to home. In the suite, we also have a capital gains tax calculator. Now, we all know when calculating capital gains tax, you have to perform an income tax calculation, then add your net gain to that, and once again calculate the final result. So this being on an individual primary residence, we all know that there's a 2 million rand non-inclusion amount. So if we were to change that to 2 million, you will see that there is zero additional tax payable. We've got capital gains tax for the non-primary individuals, also with the built-in income tax computation. So if we change the income tax amount of the individual client to 600,000, everything will be altered, and it will show you the difference by adding a capital gain to it. Same with companies and trusts. So this is automated for you, and you are able to print it out and pass it on to clientele. We go to our next calculator, transfer and bond calculator. There's no explanations required here. This is standard for your benefit. You can print that out and pass it on to clientele as well. We go to the loan amortization often neglected. We take it for granted. The loan amortization table is not simply to calculate the repayment amount. It is for guys to assess their tax position when they purchase it, the amount of interest payable in the number of years, the maximum gearing they can afford, perhaps in a commercial property, because we all know the higher you gear your commercial property, the better the internal rate of returns and modified internal rate of returns are. So this loan amortization calculator is also in the suite for you. We have got a personal budget and planning tool for the individual estate agent. Very importantly, yeah, again, the budget and planning tool isn't about just simply putting your budgeted costs down and that. We need to compute the amount of property or the value of property that needs to be sold in order to meet your budget. So yeah, all your input would be is your current commission split. Let's say that is sitting at 70%, and your income tax directive perhaps at 26%. You will notice that it has altered the amount of the value of property which you would have to sell in order to meet your minimum required expenditure based on your target. Your targeted income after tax, you can input that field yourself and it will automatically calculate how much you need to sell per month. Scroll to the bottom of the sheet and you will see we have calculated your per day cost. We've calculated your hourly expenses, your income per day, and your income per working hour. So it is a neat tool for you to budget properly and plan accordingly. Let's have a look at our next calculator in the suite. Will be a mandate manager to help you manage your mandates. Your only input fields or mandatory input fields would be the date listed, the date sold, the listing price, and the sold price. And we will calculate your average number of days in the market to sold. We will calculate the average percentage of listing prices achieved, the weighted average number of days for unsold properties, etc. It automatically ages it every time you open up your laptop, computer, whatever the case may be. You'll note the days have moved on, so you can set your own action plans according to the color coding. So anything sold in the green would be under 45 days, for example, which is an excellent position to be in, and it automatically calculates all these factors for you. I think we do have more in the suite. Yes, rental yield calculator. Very simply calculate value based on the rental yield. If you know the suburbs rental yield in the area and your net rental income, you would be able to calculate the value, give you a broad perspective of what the value of the property is at that point in time. Let's say it achieves a 5% only, and there is the value of your property based on the rental yield. Calculate the yield based on rental income. Let's say we are receiving 250,000 rental income in this instance, and your yield over your purchase price of your property would be 7.81%. So it's a nice little tool, again, handy, simple rental yield calculator, all for your convenience. And then finally, a fantastic tool for those of you who wish to perform your own income tax. The calculator is detailed. You only put in basic data and we do the rest for you. We will calculate your business kilometers. If you put in your total kilometers traveled, your business kilometer, we calculate your wear and tear allowance, your travel, your use of home office according to the pro rata percentages of space utilized, your medical aid. You just put in the number of dependents you have and your contribution plus out-of-pocket expense, etc. And we perform the entire personal tax process for you, so you can either test if SARS have given you the correct refund or you're paying the correct amount. Now we've got it for the 2020 period, which some of you will still have to submit, as well as for the 2021. So basically, we have an amazing suite of calculators and tools for you. We have short videos explaining all of them, as well as a long video taking you through how these actually operate. Now, the suite of calculators is available for purchase. We bring in your branding and your licensing for a period of 12 months, and you can have fun and save yourself time and really get up to speed with all the correct formula for valuation processes. I certainly hope that you've enjoyed this video on our smart suite of calculators and tools, and enjoy your day further.